And for more on how rising inflationary concerns could impact the luxury retail market, let's bring in Saks CEO Mark Metrick for a Closing Bell exclusive interview. Mark, good to have you back. Welcome.
Hey, Sarah, thanks for having me.
What are you seeing right now in luxury e-commerce sales?
It's booming. To be honest, we've seen the last, 90 days, 120 days, for Saks up north of 70% of where it was in 2019. So we're seeing explosive growth.
Are these customers not as sensitive to price increases and the inflation that we're seeing broadly in the space?
Look, I think you have to unpack the inflation two ways. First, it's the price of our goods. Obviously, when you think about labor and raw materials, they don't weigh in as heavily in the price of our product overall. So we're not going to see too much inflationary price pressure affecting there. And then on the other side is the consumer sentiment, which clearly is going to be something we have to watch carefully. But we believe that we're optimistic the consumer is going to be here for holiday in a pretty big way.
I wonder in the very short term, Mark, whether reopening of international travel this past week has made a big difference, or if the bigger shift to online has meant that's less relevant.
No, I think, look, everyone's excited to see the tourism come back, and it's early days. It's something that I think folks are getting back here for the first time in a few years. They're seeing family, they're doing different things, but we're expecting to see some excitement in the stores already in Florida and regions like that. There has been response. And then, we're expecting New York to be behind that. So it's going to be good.
So are you getting the sense that this is pent-up demand for going out, that it's all part of the reopening and the vaccines and the treatments, which were really starting to filter through into the economy and therefore might not be long-lasting? Or do you see something that, could last for a few years here?
When you think about luxury, online especially, we are at the end of the beginning, so to speak, from what's happening online. And I think the addressable market here is something that's just going to rip over the next few years. So I see a lot of room for growth. And no, I do not see it slowing down.
As we approach Christmas and the holidays, Mark, are you confident that everyone will get their gifts and their orders on time? Are we past the worst of it in that regard?
Look, you got to control what you can control. And I feel at Saks, we've done everything we can do. We've spun up, actually, 2 additional fulfillment centers over the last 5 months. We had 1, plus the 41 stores that fill for Saks. So we feel we're ready on that end. We've worked with our third-party carriers to make sure that we're getting the most capacity from them. And then, honestly, we got to count on the consumer to shop a little bit earlier. And if I may, just to share, we put out what we're calling the Saks Pulse Survey. And you could really tell from the consumer, they've said that about 60% of consumers are actually going to start shopping for holiday in October, or before Thanksgiving, with about 30% of them even before November 1st. So lots of earlier shopping. Then we've also changed our cutoff dates. You're going to have to buy from Saks 2 days. It's not a long time. 2 days earlier this year last year to ensure you get your packages in time to be under the tree. So we're working with our consumers, our third-party carriers, and we've done everything we can on our side. So I'm pretty optimistic we're going to make it work.
Mark, we've been talking a lot about splits today on the network after the J&J news. We've seen it from GE. We've seen it from IBM. You were kind of early on this trend, separating the physical retail from the online business, and I'm just wondering how it's going. I know it was mainly a financial kind of decision, but what has it allowed you to do in terms of capitalizing on this boom that you're seeing in online spending?
Yeah, no, I don't think it was a financial decision. I think it was a decision that was aimed at, getting the business to set up the right way to focus on the consumer the best way we can. And, I love how it's going. And as I've said, the online business is firing really well. And we're looking at market share, too. And I'm winning that one on there. So you have 70% growth versus 2019. The stores themselves on that same period against 2019 are up 20%. Okay. And then when you think about the ecosystem and how it's working with the consumer is still feeling, although Saks is 2 separate companies, SFA, which is the stores, and Saks.com, the consumer doesn't feel the difference at all. They're seeing one Saks Fifth Avenue ecosystem.